We are live. Good morning. Good morning to you, and thank you so much for being there. I really appreciate you listening to Smooth Breakfast every single morning, Monday to Friday. This is Valentine Ohu with Ayo Mairese on Smooth's Breakfast, although Aya's on leave, so I'm left alone in the studio. But anyway, I'm in good company. I have Oyeyemi Oke here in the studio, and I have Martin Zaroge in the studio. Good morning, gentlemen. Thank you so much for stepping in.
Good morning.
Good morning, Valentine.
Good
Thanks for
morning.
having us too.
Thank you. Oyemi is a qualified lawyer and chartered accountant. He's a director at Tax Aid Professional Services Limited, where he's currently responsible for the firm's petroleum profit tax, audit and investigation, personal income tax, custom and excise duties tax desks. Oyemi is also partner at AO2 Law, where he specializes in energy projects, finance, and tax practice areas. Martin Zarogie is a partner in the Energy and Natural Resources Services for KPMG. He has garnered over 14 years of professional experience covering tax risk management, corporate tax planning, advisory, and compliance work for local and multinational companies in various industries. Thank you so much again for being here to continue the conversation that we picked up from last Monday. It's always a pleasure to have you in the studio. Now, I'll pick up from where we left off. In the conversation last week, we touched on VAT, value added tax, and withholding tax and explained the differences. But just for the benefit of those who are just joining today for the first time, this tax conversation, can we just briefly run through those details? VAT, withholding tax.
Okay. VAT and withholding tax, typically we call them transactional taxes, and they actually, or the responsibility of payment is triggered at the point whereby the transaction is consummated. However, there is a significant difference between both of them. Withholding tax is an advance payment of income tax, and it is not particularly a different type of tax. It's just you making payment of income tax in advance, and any deductions on your withholding tax. I mean, on your invoices, for example, if you issue an invoice and there is a deduction of withholding tax, you can use the deduction when paid by the beneficiary of the service. You can use that to claim some type of credit against your ultimate tax liability at the end of the year. VAT, on the other hand, is taxation that is triggered by sales or consumption, as it were. It's a consumption tax, and it is triggered at the point whereby you enjoy the service, and is typically borne by the ultimate consumer. And as of today, the VAT rate is 7.5% on the relevant invoice or the relevant cost of service.
Thank you so much for that, Oyemi. Thank you for explaining the background. Now, Martins, let's jump right into that part of the conversation that was like the crux of our discussion last week that we didn't touch on. The the court ruling that emboldened the River State Governor, Yesan Wike, to quickly sign a bill into law, or sign into law a bill, yeah, the same thing, that authorizes River State Government to henceforth collect value-added tax in its state. That, by inference, emboldens other states to take, to take that as a precedent to what happens. But the FRS, in a swift reaction after that law was passed, urged taxpayers in a press release, especially those in River State, to continue to pay their value-added tax so to avoid penalties when they default. Who do we listen to? I mean, we're in Lagos, we're not in River State, but you would expect the Lagos State government will still understand that, oh, okay, you know what, Rivers, yeah, they can do that, we can do much more. But we, the taxpayers, are the ones that bear the brunt of these penalties.
I think your last statement is very key for me. Thank God we're in Lagos, not Rivers.
I didn't say thank God, just for a clear perspective.
But anyway,
Okay.
it's there is a court judgment at this point in time. So irrespective of what anybody believes, the judgment today is that the federal government is not the appropriate party to impose VAT or collect VAT in any state, and that it should be the state government. Even though the FRS has filed an appeal against their judgment, they've also filed a notice for a stay of execution. I'm not aware that that's either of those applications have been granted. Now, Yemi would be better placed as a lawyer. In the absence of that stay of execution, does this mean, and it may also mean that the Rivers State government actually is the appropriate party to collect the tax? But I think a lot of the conversations around VAT and who is responsible they've all typically been political. You've had questions around why would you use VAT collected from the sale of, say, alcohol in Lagos and then give it to a state in the north where there is Sharia and the sale of alcohol is
It's
banned.
prohibited.
And you even have places where you see pictures of people destroying bottles and bottles of alcohol. Meanwhile, when the VAT is collected down south, yeah, it's available for them up north. So a lot of these conversations have always been political. I think at the end of the day, nobody has ever asked the question around how do we even manage a decentralized VAT system. So you hear things like under a true federal system, everybody should do, but I don't think anyone has ever considered the mechanics. And I'll tell you some of the challenges. Today, I'll give you an example. Most banks have branches across the entire country. Today, they typically would file VAT at one point. All of a sudden, you would have to file VAT at 36 different points. Who's going to bear that additional cost? Secondly, if you say everybody should enact the VAT law, and I'm not saying it's impossible because you do have also scenarios and states and countries where you've seen this happen, but we haven't even talked about all of these challenges. And Lagos State says that under my own VAT law, if any transaction that originates from my state, I will charge you VAT. And Rivers State says under my own VAT law, any goods or service that is consumed in my state, I will charge you VAT. The implication is that if you have a manufacturing plant in Lagos and you manufacture your beverage or whatever it is here in Lagos, you get charged VAT just for manufacturing. The guy takes it down to Rivers and sells, and charges another VAT. So that's 2 layers of VAT already. That's increased cost. So while it is all good and equitable to say, hey, why should we use VAT in one state to develop this other state? I think there's still a long conversation that we still need to have around, is it even possible? And if it's possible to decentralize VAT, what other structures do we need to put in place to ensure that, because that's the part that gets lost.
Yes.
That taxpayers don't even want to use taxpayers. Consumers every day, because when you hear taxpayers, people think, no,
It's only the businesses. Yeah.
So that everyday consumers, people like me and you, are not worse off, especially given the challenging economic times that we find ourselves in. It is very, very possible for this to just go down south pretty quickly.
Yes. Let me give you. Sorry, before you jump in, I'll give you a reference. On Friday, I decided mistake. I decided to go out because Val was stressed. Val had a busy week. Val felt like this mundane life is not going to help me in networking, so I need to go out at least once a month. That was the first time I went out since like 2 months. Right? I'm unashamed of that. But by the time I saw the receipt and I saw the VAT on that receipt, I say, hey, that's why I don't go out. So my brother, where do we go from here? So, I mean, we had the Joint Tax Board address similar issues when there was the contention around multiplicity of taxes. So based on this, now where do we go from what the foundation that Martin's just laid?
So I don't think we have an issue, at least as far as VAT is concerned. We don't have an issue of multiplicity of taxes, although it's arguable because of the sales tax that is applicable in Lagos State. But I think one thing we should bear in mind is, and I would not even want to speak as a lawyer, I would speak as an ordinary Nigerian, right? There's a bit of confusion because as an ordinary Nigerian who is looking to comply, I have a state saying that I must remit VAT to it, and I also have a federal agency saying that, you know what, ignore that state law and remit to us, right? So for me, if I'm an ordinary Nigerian, the question I would ask is, where do I go? But I think Martin has laid a good foundation with regards to the political side of VAT administration. And this trace, I mean, the history of contention of VAT actually started as far back as the 1979 Constitution, whereby I think it was the AG Ogun and Aberu Agba, whereby we had issues around VAT and various cases have given conflicting decisions. We've seen cases whereby the Supreme Court will say that because VAT is a federal enactment and it has covered the field, the state shouldn't legislate on it. But I think, one, I'm a bit disappointed with regards to the constitutional amendment process because I'm not aware that issues like this have actually been addressed. Unfortunately, we are looking at creating more states that perhaps are not economically viable without actually looking at some of the actual, the real issues.
And this could very well be one of some of those incentives that's pushing them to claim or demand for their own state.
So if I'm able to generate money from a particular tax, why would I not want a state of my own? But what I'm saying is that we would move away from this confusion if we have a clear constitutional amendment, because the area of contention or the issue is actually the second schedule of the constitution with regards to what the federal government can legislate upon in terms of taxes, and it appears that the federal government can only legislate on income taxes, stamp duties, capital gains tax, without necessarily on consumption tax, and this has always been the area of contention. So we need clarity, and I'm looking at moving forward in order to solve the seeming confusion which we have, and I think we can do that by way of constitutional amendment so that we know who should actually administer VAT.
Thank you.
And just to provide like maybe this is a ray of hope. The River State law was signed, I think it was August 19 that it came into effect. Therefore, the earliest they can expect to collect VAT, if they do expect to collect VAT, would be 21 days into September, based on the provisions of that law. Hopefully, between now and the 21st of September, there would be additional clarity, either in form of a ruling from the Court of Appeal or a ruling on the state of execution by the FRS. And that, if that's granted, then obviously the status quo would remain until I don't think that this is a case that will go away quickly. I think it will probably get up to the Supreme Court. But at least in the intervening time, if the FRS is able to get that state of execution between now and 21st of September, then obviously taxpayers will continue to pay to the FRS pending the final completion of the case.
Thank you so much. Oyemi is my guest, Oyemi Oke, and Martin Zarage. They are both my guests, lawyers, partner. Well, Oyemi is a lawyer and chartered accountant. Martin is a partner in energy and natural resources services, providing that for KPMG. Has also garnered years of professional experience in company tax, corporate tax planning, advisory, and compliance work. Oyemi in audit and investigation, personal income tax, and petroleum profit tax, amongst others. We'll be answering questions, right? Please so send them now to WhatsApp 0809-444-0981. There were questions that were asked last Monday that I brought back to this conversation, so we'll pick up from those after the break. You can call 0144-89981.
8.1.
Awesome. So the first question that came in last Monday, or rather, one of the questions was, can you shed more light on the new pay tax, pay as you earn tax? That was from Shola in Ikeja. There was another question around ease of burden, or rather ease of payments to various states. Sorry, on VAT, the ease of payments to various states would be a burden on taxpayers. Imagine a bank that has branches in all 36 states. In addition, the allocation of VAT to federal government is just 15% and 85% between states and LGAs. So the gains to the federal government will not really be impaired. We have an impute VAT recovery system and remittance to states. May not be easy to implement using current tax issues. Fred, as a contribution, we are coming back.
My radio always stays locked to Smooth 98.1. They play me the best of soul, jazz, and everything that has to do with great quality music. My name is Maka, and this is your love music, love life radio station, Smooth 98.1.
Providus Bank, future forward banking.
You're listening to Smooth Breakfast. My name is Valentine Uhu. Thank you so much for staying with us. 27 minutes past 8 o'clock. This is Lagos Talks 981. It's a special. Now, this is a special conversation around taxes. Know your taxes. We had the episode 1 last Monday. This is episode 2 in the limited series. Oyemi Oke, qualified lawyer and chartered accountant, is my guest. Martin Zoroge, partner in Energy and Natural Resources Services for KPMG. My other guests, they've explained and broken down VAT, withholding tax, broken down multiplicity of taxes, made reference to the River State ruling and the court injunction that, court order that they applied to the Federal Inland Revenue Service. And the court has ordered the stay of action, or rather, say we should get back to status quo, right? Continue paying in the meantime. So a bit of contention around there still, but we wait for September 21, hopefully, to get a finalization of that.
The court hasn't ordered the stay of
Not yet.
execution,
Oh.
not yet. We're just hoping that there would be something that would bring clarity between now and September 21. When, if there is no clarity, there obviously will be conflict, because the River State government will be expecting VAT to be paid to them as at that date. That's the first date where people will be expected to file and pay to the River State government. But as you already aware, and as you've stated, the FIRS would also be expecting the money too on that same day.
So whose pocket is it going to go into?
So if we don't get clarity, additional clarity between now and then,
Yes.
there would obviously be some chaos.
Wow. Okay. So there were messages we got. I'll start with the contributions before I get to the questions. On VAT, this was from Fred in Lagos. On VAT, the ease of payments to various states will be a burden on taxpayers. Imagine a bank that has branches in all 36 states. In addition, the allocation of VAT to federal government is just 15%, and 85% between the states and local governments. So the gains to the federal government may not really be impaired. We have an impute VAT recovery system, and remittance to states may not be easy to implement using the current tax rules. Thank you, Fred. Another Fred got back to us to say consumption tax was only for hotels and restaurants, so the benefits from VAT outweighs consumption tax. Feel free to.
I think there's been some. There's an assumption when people say that the federal government may not be necessarily negatively impaired if you decentralize VAT, and that assumption primarily is that the VAT on international trade would accrue to the federal government. But I don't even think that that's a certainty, because every state can decide and be as aggressive as they want to be. If you look at the River State law today, it's talking about collecting VAT at the ports, which you would obviously believe would be due to the federal government, given that the port is under the authority of the federal government.
Yes.
But if River State believes that, hey, these ports are located in River State, so it's mine, that's an issue of contention. Lagos State may also be claiming the same thing. So these are contentious issues that will still arise. Today, under the federal VAT Act that we have, if you provide a service to a Nigerian company anywhere in the world, provided that Nigerian company consumes that service here in Nigeria, VAT would apply, and that VAT goes to the federal to the FIRS. Now, River State can say, hey, the person consuming this service, even though it's being provided in the US, is resident in River State.
Yes.
So why would you say it's international trade, and so it's going to the FIRS? So there's a whole lot of contention that would still have to be discussed. A lot of issues that will still need to be addressed before you can even confidently say this party may not be worse off, or this party may be better off when you decentralize the system. I don't think we've had any of those conversations right now. We've basically limited the conversations to more around the politics of this and probably the legality also from the constitution. But there are the technical issues that will still need to be addressed if we decide at some point that decentralization is the way to go from a VAT perspective.
And I mean, I think the major point, or why is actually a sticking point in terms of contention between the federal government and the state government, is the amount of VAT that is generated is humongous.
Yes.
So everyone wants a piece of the action. And as Martin has said, economically viable states, perhaps maybe Lagos, Rivers, are actually huge or significant generators of the revenue. And unfortunately, they also want a larger part of the pie. So in terms of the centralization of the VAT structure, there would definitely be issues from compliance perspective and also from administration perspective. So this needs to be thought through. But if I want to be a political person, I would say perhaps a central administration of VAT may not be good, or may not be in the best interest of true fiscal federalism.
And Martin's rolled his eyes. Now, interesting. Just to put this in perspective, yeah. FIRS raked in 4.9 trillion naira in 2020. 4.9 trillion naira. So if you actually think of that, nobody wants to have their pocket leaked or the hole in their pocket when they're accruing such sums, and the target is always to increase it every year especially with the obvious fact that the tax net is not as broad as would be expected. Let's take some calls. 0144 Please call to ask your questions or make your contributions. I'll share another question that came in from last week. This one came from Shola in Ikeja. It says, please, can you shed more light on the new pay as you earn tax that took effect from the 1st of January? Martins?
A new pay as you earn tax.
I don't know what he referred to.
I'm not sure there is a new pay as you earn tax anyway.
Payee. Maybe
Yeah.
if you can explain, so he can understand how that is remitted.
Okay. Pay is the way our pay is structured is a progressive tax system where the higher you earn, the more you are expected to pay. Now, for people in paid employment, your employer is primarily obliged to act as the agent of government to deduct that tax from your emolument and remit to the state internal revenue service where you are resident. Not where you work, where you are resident, because it's possible to, especially in a border state like Lagos and Ogun, it's possible to be resident in Ogun State
And be working in
and
Lagos.
working in Lagos. Like people who stay in Shongo and come all the way to VI every morning. But the pay is paid to the state where you are resident, not where you work, unless you qualify as what we call an itinerant worker, which is someone who doesn't have a specific place of residence and has to move consistently across various states. So there is a mechanism under which your tax will then be paid to the various states in which you are deemed to have a place of residence during the course of the year. Now, for people in self-employment, they are supposed to do the computation themselves. That's the place where I think that there's still a significant amount of challenge because a lot of people don't do it. They're supposed to do their own computation themselves and file within 90 days of the start of the new year. So you look at 2021, you take your 2020 income and you file within 90 days into 2021. Now, another avenue again is I think a lot of people in paid employment seem to also think that the only income that is liable to tax is the income they earn from paid employment.
It's not?
No, it's not. All of your income, unless those that are specifically exempted. Dividends, for example, is franked investments. So other than franked investment and maybe other specific income, all of your income is supposed to be reported. But people in paid employment tend to believe that it's only what my employer reports, which is what my employer pays me. That's what is liable to tax, which is totally incorrect. But it still boils around trying to increase the tax net, and maybe that's where the conversation around fiscal federalism may be very, very key, because many people have also argued that the fact that I don't have to do anything, I just sit down in my state and they collect VAT from Lagos and distribute to me, has probably made some people lazy. And so if you take it away, they would also then begin to look for ingenious ways to ensure that they are also able to raise revenue from taxes in their own jurisdiction. I don't know whether it's a valid argument or not, but it's an argument people have also raised in terms of support for fiscal federalism.
I think from a compliance perspective, two things to add. If you are an individual, whether underpaid employment or an entrepreneur, you have an obligation to file your tax returns no later than the 31st of March of every year. So it's not limited to, as Martin has said, filing of only the income which you earn from employment. If you do have a side hustle, right, you're supposed to file tax returns on everything or worldwide income. That's one. Then two is from an employer's perspective, I'm thinking maybe the person that asked the question may be thinking along these lines. From an employer's perspective, Apart from the deductions and remittance, which you must do no later than the 10th day of the next month, you must also file what we call payee returns no later than the 1st of January of every year. If you do not file, you are subject to penalties of about 500,000 naira. So, yeah.
Imagine if your business does not make money. Or does not make half as much. Where will you pay from? But I'll come back to that question. Calls to 0144899981. We're streaming live on YouTube, so you can watch and comment as well. Instagram live at Valentine Ohu. Messages to WhatsApp 0809 0981. Hello, good morning. Good morning to you. What's your name, please? Hey, Simon, where are you calling from? All right, please go ahead.
Hi, Martin. Good morning. This is your boy, Simon.
Simon, good morning.
Yeah. Okay, so two questions I have, and then two additional comments. So the first question is it possible to have a perspective on what happens in other jurisdictions where they have everything at unit VAT, so that can possibly guide us on what we can expect? The second question is to ask whether the River State VAT Act, whatever thing they call it, whether it has a input output VAT mechanism such that people can claim it is VAT against the output VAT that they collect. The third item I want to just put out is to ask what is the possibility of having a FRS manage VAT for all the states? So you still have a centralized collection. There's post collection. They can now decentralize the remittances to various states where those collections can be. And then finally, on the personal income tax, I think one of the things I will recommend to many HR persons is the listening is to say, is it possible for them to even have some kind of summary payment of both the gross salary and then the total taxes paid around him as the days go by for each of the employees? That can help them to know, oh, this was their total amount of income that I earned this period, and this was the amount of tax that I paid, such that when they are doing their employee filing, that becomes a little easier for them to get the change. All right, so that's just what I have.
Thank you so much, Simon, for those questions. Quite intelligent questions there. Thank you very much. And being broad really has. There are three sets of questions. Martin, do you want to pick up from there?
Okay, I was trying to take down some of the questions. I'm not sure I got all. Okay. I think the first one that comes to mind is Brazil has a decentralized VAT system. Brazil has a decentralized VAT system, but it's also fraught with a number of these challenges. So there is some coordination work that is also done at the national level to try and address some of these challenges. I think the first one I mentioned was around the origin destination issues, because when some states say we would collect based on the origin principle, that whatever transaction originates here will collect VAT, it doesn't matter where it ends up. And some states say we will collect VAT based on what ends up here. Those are kind of some kind of issues. So one of the first things they've also tried to do is say, how do we eliminate those instances of double taxation on the same good, based on the fact that two different states have used two different principles. So they have a national board that basically tries to coordinate all of these activities. Again, it hasn't been pretty easy, and there's a whole lot of study around what they've been trying to do to address all of these challenges. In terms of whether the River State law has an input-output system, the law actually makes reference to input and output. The challenge again is the law is a River State law, and it hasn't addressed issues of what would happen if let me first break down what the input-output system is. Now, if I buy raw materials in order to manufacture a good, I would incur VAT when I buy those raw materials. When I'm done manufacturing my good and I'm selling, I will charge VAT. The law today allows me recover the VAT I paid on those raw materials from the ones I collect from my consumer. So it's the balance I pay to government. I don't pay the full VAT I collect. I recover what I paid as VAT on those raw materials, on what I then collect from my customer. Now, if I incur those raw materials in, say, Kano, and I pay the VAT to the Kano state government, and I come and I manufacture and sell in Rivers, and I say to the Rivers state government, hang on a minute, I paid VAT in Kano, I'm going to take it out from your own money. I'm particularly sure, okay, let me not say, I feel somewhere that Rivers state will say to me, what's my business with Kano? That's up to you and Kano. Pay me my full money. So even though the Rivers State law already makes provision for the impute system, the question is this impute that is incurred in Rivers State, or can the Rivers State government allow you, or would they be willing to allow you claim impute, irrespective of which state you paid that impute to? So that's still a question that is left unaddressed. I think the third question is around whether the FIRS can coordinate and then remit to the various states. In a sense, that's exactly what's happening right now. The only difference is that they're not remitting exactly what they collect from you back to you. It's all put into a pot, and then we share it in a particular ratio. But a portion of what is collected from you still goes to you. And people have argued that in any fair federation, there still has to be a way of ensuring equitable development across board. And because the challenge you would have is that if you have a particular region or a particular area that is developing in leaps and bounds because it has access to a bit more revenue, and you have some other regions that are stagnating, there is no way that the region that is in a sense progressing can continue to do so without that other region. It's practically impossible. Everybody there will flock to Lagos. It would create significant burdens on infrastructure in Lagos, and there's a limit to what it can cope. So it's in everybody's best interest for there to be some form of equitable development across the country. Is VAT the means of doing that? I don't know, and I'm not going to say so. But when we talk about fiscal federalism, we also need to appreciate the fact that everybody has a role to play in ensuring that there is equitable development across the country.
Thank you. And Oyemi, in line with your next interjection, also consider his suggestion, Samuel's suggestion that HR departments should actually sensitize their staff to well understand what part of their salary goes to VAT every month, especially pay as you earn.
Okay. What part of their salary goes to pay as you earn, not VAT?
So pay as you earn. Yes.
Okay. So I think I agree with that. Another point which he raised had to do with, I think, computation of actually the relevant taxes that should be paid. I mean, depending on how sophisticated you are, you can actually have something as simple as an Excel worksheet that can actually, once you punch in the figures, it gives you the amount that can be paid. If you want to take it a bit higher, you can actually subscribe to various applications that would help, right, with regards to computation and ensure that the maximal benefits in terms of incentives are already codified into the various applications. So that can be done. With regards to what has been said on VAT administration from a central perspective and perhaps government now distributing, that's a good idea. And as Martin has said, that's what we do now. Right, but the problem is also there's a high level of distrust between the states and the federal government, and that's why we're even here in the first place. I don't think, in as much as that's a good suggestion, I don't think we will be solving anything in terms of some of the issues around fiscal federalism that we continue to mention. So those are my thoughts for now.
Thank you so much for that. I will take your messages after this break. We're having a conversation around taxes. It's important that you know your taxes, so you know what is being deducted and what you owe and what the government owes you, if they do. 8:46 is the time. Stay with us here on Smooth.
Smooth 98.1. Absolutely no one does it better.
So I want to come back to tax exemption for special people. In government and whoever it's applied to.
Okay.
Speed, innovation, convenience, lifestyle goals, or just simply getting service that is designed just for you. Yeah,
and then I'm particularly interested in helping people understand the taxes they pay, depending on the type of business they operate.
Okay.
I said I'm particularly interested in making people understand clearly the kind of taxes they pay based on the type of business they operate. So for people who own limited liability companies, who have business loans, what kind of taxes are they bound to remit? Yes, I get asked that a
Email
lot.
business concierge at providusbank.com to switch to a future forward banking
And then we can wrap up.
experience.
This is on the last
Providus
stretch.
Bank.
Okay.
Future forward banking. Providus Bank.
All right, for that.
Future forward banking.
Thank you to you on YouTube, to you on Instagram Live, to you on WhatsApp, and to those who are punching the phone lines now 0144899881. Messages. Bamidele on WhatsApp says, "Good morning, team. The analogy on challenges of VAT implementation as regards a manufacturing plant in Lagos and sales of products elsewhere is wrong. He said VAT is a consumption tax, not a manufacturing tax." That's what Bamidele thinks. Anyway, you clear that up for us, Martins. But Enik says, "Good morning, Smooth. Please, can I guess kindly make it clear what the benefits are to taxpayers having VAT collected by the states as against the federal government collecting it?" Enix, thank you. Shola from Ikeja says, "Good morning, Valentine and analysts in the studio. We hear me okay? And Martin Zaroge. Please, can you shed more light on the new Finance Act as it borders around pay as you earn tax? It took effect from January 1st of this year." I think this is the Shola that brought up that question on the new Finance Act. So it's not necessarily a new payee, but based on that act. But that's it. That's his message. Martins?
Okay. When you say VAT is a manufacturer, is a consumption tax, not a manufacturing tax. That's not totally correct. First of all, if I manufacture goods here, and Lagos State law says that its VAT is based on origin, even though those goods are not consumed here in Lagos, wherever they are consumed, to the extent that the Lagos State law, I'm just saying there's no Lagos State law, is based on origin, VAT would apply on those goods. So if you take those goods to Rivers, to Borno, anywhere and consume them, to the extent that they were manufactured here, and this is where that transaction originated from, whoever manufactures sells is irrelevant to Lagos State. So that transaction originated from here in Lagos State, I would collect my tax here. If another state says, I don't care where it originates from, as long as it is consumed here. So I would come to the manufacturer in Lagos State and just take his revenue. I'll take his revenue and I'll slam tax there, because I don't care wherever you sold it. It's not my business. 7.5% of your entire revenue should be due to me because you manufactured everything here. And then the guy in Rivers State says, I can't take your revenue because I don't know. I know you don't manufacture here, but which of this? How much of this revenue did you generate here in Rivers State? I will take VAT on it. So that's the issue, and it's real, or it will be real unless we find a way to then say, even if states are going to all levy VAT, we want a scenario where there is a common base, there is a common understanding, everybody's using destination principle.
Yes.
Yeah. So those are the conversations that we'll still need to have at some point if we're going to go ahead with this.
Yeah, I think
Sorry, 1 second. Yeah, hi, hello, good morning. What's your name, please? Haj Adamu, please go ahead.
Yes, my contribution is this: VAT, value added tax. It's been generated by the Federal Inland Revenue Services. And my own understanding is that money goes to the Federation account, at the end of which, or quarterly, that money is going to be shared amongst the 36 states of the Federation. That in itself go back to the River State. Now, coming up with this new tax regime by the River State, I think it will be a double tax.
It's not a new tax, Haj Adamu. So River State is actually asking for taxes that are supposed to be accruing from that state to be remitted to them.
Only, like I said, you understand, is going into the Federation corpus. And at the end of which, that money is shared among the 36 states of the Federation.
So that is why, hold on, that is why River State, okay.
So, one. Then, like we that work with the federal government, you understand, normally we've been posted to each state of the Federation. I served in Delta State, I served in River State, you understand, now I'm serving in Lagos State. My taxes deductions, you understand, goes to the Lagos State or River State when I was there. Do you understand what I'm saying?
Yes, please.
That alone goes into the state coffers.
All right.
One, there is 13% graduation, which goes to the particular. You see, the issue is this.
Okay, I have to stop you there because I don't have time to continue this conversation. Apologies for that. We will probably go on and on. It's sounding political, but to clear the air, he's made a valid point in terms of working for the federal government and being posted from state to state. I think you mentioned that, Martin.
And before reacting to what Alhaji Adamu said, there was a comment on manufacturing tax and not VAT. I think we should simplify it because, I mean, when Martin was going on and on, I mean, for me, it was more like, but Martin, you need to be a bit simplistic.
No, it's a master class.
So, I mean, I think where we should start from is that the idea behind manufacturing companies actually claiming input and output VAT is based on the VAT Act as of today, right? Not all businesses can claim input and output VAT. For example, Martin and I continue to suffer because we can claim input VAT on whatever invoice we generate. But what I need to clear is that the input and output VAT, it is not manufacturing tax. It's actually a system by which you compute VAT. So if you're a manufacturing organization or you are in activity to purchase goods for the purpose of resale, then you can claim input and output VAT, which is peculiar, right? And Martin now went on to explain why we would have challenges if, for example, we have a decentralized system. There is VAT on the input in one state, output in another state. How do we solve it? But I thought to clarify on that. But with regards to the call from Alhaji Adamu, I think what has been, and I'll go back to the point which I made before now. What has been the basis of this seemingly confused state of affairs is what I would call the non-clarity of the Constitution, right? Because there is a lacuna, as it were, in the second schedule of the Constitution with regards to what the federal government can legislate upon, as regards taxes, right? Jurisprudentially, the states have actually come to argue to say that the administration of VAT should not be within the purview of the federal government. So that's been the major argument. Perhaps even if it has some political flavor to it, the issue is that we do not have clarity under the Constitution with regards to who should administer this VAT, and that is why we're here.
So the Shola's question wasn't necessarily answered in terms of the Finance Act, but if we can do it like summarily in 30 seconds, can it be addressed in terms of the new Finance Act? What position does it keep place the pay or pay as you earn? Does anything change?
There's no real change.
There's no real change. Okay, Shola, so don't be scared because you sounded very concerned about that. Thank you so much. I would like us to continue the conversation. There are a lot of questions I still have in my head. But I'd like to especially thank Oyemi Oke, qualified lawyer and chartered accountant, director at Tax Aid Professional Services Limited, and Martins Arogie, partner in Energy and Natural Resources Services for KPMG, with over 14 years professional experience in tax risk management, corporate tax planning, advisory, and compliance work. I'd like to thank you as well, and please let us know how we can reach you, because I assume a lot of people have more questions to ask. So Martins, how do we reach out to you?
Yeah, you can send me an email to martins.arogie@ng.kpmg.com.
Wow,
martins.arogie@ng.kpmg.com. Thank you.
Okay, you can reach me on o.oke@taxaid.com.ng. Oke is spelled Oscar Kilo Echo at TaxAid. Aid has an E behind .com.ng.
Thank you so much. My name is Valentine. Stay tuned for sports inside the locker room this morning.
98.1. Love music.
Again, not enough time. This is a master class in taxes, my guys. I am so grateful.
Martin was going on
Hey,
explaining.
Martin is like,
The guy even still didn't understand.
it's a
what
proper
he was
master
saying.
class. Like, we should have it. Mad.